All right, we're going to get started today looking at the S&P 500. You can see that the S&P is above all of the major moving averages, which is a sign of momentum. You can see we're overbought, and we're in one of the seasonally best um, months of the year in December. We can see from, hold on. Okay, we can see that December is a- on average up 1.1%. And there's a lower volatility this month. So you put those two together, and we have people happy about Christmas and New Year's, two very um, well celebrated holidays. Then you get cheer in the stock market also. Okay, so let's look at the S&P. You can see that we're above the 20-day exponential moving average, which is very important. And we're right at the bottom of, right at that trend line right now. I mean, at the 20-day exponential moving average. So, and we're overbought. We've been overbought for like a month and a half now. Okay, so let's look again at, okay, so we have an extreme amount of support at this 20-day exponential moving average. Um, and if we look at our calendar, we have a couple things going on this week. We have the Fed meeting um, in Wednesday and Thursday. We have triple witching, and that happens four times a year. And it's the expiration of options. A lot of options expire that day. So we have a lot of volatility expected on Friday. So if it goes up and down a lot, it's because of the settling of the options and a lot of the things are revolving around that. We do have Christmas coming, and that is in a week. A lot of times, this is called the Santa Rally week right here. Usually, we have a good market the days before Christmas. And there's some people that um, carry that Santa rally towards the end of the year also. We have two major holidays in a very short amount of time from each other. We also have end of quarter window dressing. In other words, the stocks that have performed the best so far this quarter, a lot of the money managers align their profiles, their top holdings, with those stocks. So that's another indication why some of the best performing year to date will keep doing better. And also, some of the worst performing stocks year to date might be sold for tax loss harvesting. So you might have this dichotomy of the best performing stocks continuing to do better, and you have the worst performing stocks continuing to do worse for those reasons. So we have the new year, we have the New Year's holiday, and January is another positive seasonality wise in the stock market. So we have February is like a kind of a doldrum month. It's not a very positive month. If we look at our calendar, February is up 0.29%. Um, maybe it's because earnings aren't coming out that month. Maybe it's um, because, well, there's some that say that the stock market isn't so great because you don't have very great weather in the East Coast, which is where a lot of the trading happens. Okay, that's okay. Let's go to our next talking point. Okay, we had earnings from Oracle, Adobe, and this past week. We had Broadcom and Costco. So the interesting thing about Costco, we've been saying for a while, is Costco is a very rich stock. Is very um, expensive. So whenever we look at, let's look at Costco. Their PE, price to earnings ratio, is 43, and they're only growing at like 10%. Um, so their PEG ratio is 5. That is a very expensive stock. It is 5 times the price it should be. So if they have to really do good and at every earnings report, if not, they'll get hit in a major way. Um, the interesting thing about Costco is their profit margins aren't that great. There's only 3%. So they have really thin margins. And we have return on equity is 30, which is good. Um, okay, so this is one of the stocks we've been following. We know that 90% of their revenue comes from membership fees. So um, they're hurting from the tariffs recently. So in general, this is a very expensive stock. I would look to buy this whenever it's down a lot. Um, not right now. All right, so let's go back and look at, right? Okay, let's look at Broadcom. They came out with earnings, and Broadcom went down like 11 or 12%. Let's look at that stock. AVGO. They went down 11%. And let's look at their forward PE is 40. Yahoo Finance says it's a 0.5 PEG ratio, which is traditionally is like half off. However, they're not growing that much. Let's look at the um, estimates for AVGO Broadcom. And you can see, let's look at what their calculations say for their. So Broadcom, they're involved with the AI infrastructure build out. They sell chips that are customly programmed. One of their major customers is Google, um, and they have like T tensor processing units, and they're kind of a competition for NVIDIA. You can see that they're growing, let's say from this year to next year, 30, around 40%. So if they're growing at 40%, then their forward PE the forward PE is 38. So they're like a fairly valued stock. So they're growing at 40% and their forward PE is 38. So they're fully valued. I'll wait for it to go on sale a bit more for me to be interested in that one. Okay, let's look at, let me see, get some more of our talking points. Okay, so Broadcom came out with earnings, and that hit the whole AI trade. A lot of times, whenever you have negative earnings for one stock in a sector, such as AI infrastructure, a lot of the stocks that are associated with AI go down with that. For instance, um, we had we had NVIDIA go down. We had all the utilities related to AI infrastructure go down. We had Micron go down. We had um, Oracle. Let's look at some of the stocks that are going to be reporting this week. We have Micron. which is involved with the memory for the AI infrastructure build out. And we have Nike and FedEx. FedEx will tell us a little bit about the consumer, how the consumer is doing, how shipments are going. That usually is a good read on the economy. All right, let's look at some of our numbers for this week. SB is down a little bit for this week. We went into the week overbought, so um, we have 60% of the stocks above the 20-day 200-day moving average. So we have momentum in the stock market. The Fed is still in a reduction phase. In general, that is a plus for the stocks to go up. Our near-term catalysts, we have Christmas and New Year's and all the good feelings around those holidays. We have the 10-year has been up 3% this week. That's interesting. Why does the yield for the 10-year go up when the Fed is reducing interest rates? Um, so let's look at let me see what else. Okay, let's look at the S&P 500 trend line. We're basically right in the middle of our very reliable uptrend, and we're overbought right now. So let me see. We're going into Christmas, so we have a good chance we're going to hit the top end of this range during the Christmas time. And that's kind of where we're at right now. And we're overbought. So let's look at the next talking point. We got the 10-year treasury. This is interesting. We've had an inverse correlation for the 10-year treasury yield in the S&P 500. So the purple is the S&P 500, but right now we have like a 1-to-1 correlation. So as the 10-year yield goes up, the stock market goes up. And that's been the opposite of what it's been like for the majority of last year. So let's look at, I'm not sure why that is, but we'll think of something for next time. Okay, crude oil is down 2.2%. Maybe why is it down 2%? We had a lot of global turmoil. We've had the United States take over a oil tanker in Venezuela, which is kind of interesting. That reduces the amount of oil on the market. So if it reduces the amount of oil on the market, that should increase the price. I'm not sure why it's down 2.2%. Maybe the global economy is slowing, or maybe some of the um, countries pumping oil create more supply. So it's one of those two. Inflation isn't changing. It's still around 3%. The US dollar is unchanged for the week. Gold is up 2%. Okay, we're going to look at a gold stock this week. Um, we have we have a dollar that's kind of steady. It's not helping or hurting gold prices. Um, so right now, if the US dollar goes down, that makes the price of most commodities go up. So we're going to look at a gold stock, Newmont Mining later on. Okay, the US dollar index is kind of steady. And the reason why I study this every week is it has an effect on the earnings of multinationals. So right now it's going to have almost no effect on the earnings of a lot of the big tech stocks we're following. So the fear and greed index, we're in fear mode right now. We're getting more fearful than last week. The stock market went down 0.5% last week on AI fears. And the translation is when people are fearful in the stock market, we have to start looking for things to buy. And it's kind of nice having a knowledge that usually stocks go up around Christmas. So we can whenever everyone else is fearful in the stock market, we could proactively be looking for stocks that are good to buy right now. Okay, so we have bullish momentum, bullish in the AII survey. So if the amateurs are bullish, you have to be the opposite. And it's when it's bullish, you say caution, take some profits off the table. Okay, so in investing, you have to sometimes think contrary for when you're thinking about allocating new capital. All right, the VIX is staying low. It's like multi-year low. We have 15, it's at 15 right now. So that means we don't have a whole lot of people buying protection for their stocks, that people aren't worried that the stock market's going down. So we do have momentum in the stock market right now. Um, so I would say our emotional graph is we're at fear right now. And we had a little bit of a lack of confidence in the AI trade, and a lot of the AI related stocks went down a lot. And so it's important whenever there's a capitulation in the stock market, you want to start to look for things to buy and or don't sell. And whenever people are greedy and we have the emotion of greed in the market, you have to start looking for things to sell or don't buy. So, all right, let's look at our first to worst. The best sectors from last year are continuing to be the best sectors for this year, actually. And that's probably because their growth rates and their profitability are far higher than the other sectors. Um, Let me see. So it's interesting. The real estate sector is zero. It was really bad last year, 1%, and it's also done bad this year also. And we have the financials doing really good this year. They're up 13%. IT is up 20%. You can see that the communication services and technology went down like two or 3% this week on AI fears and with Broadcom's bad earnings. All right, so let's look at the PE sector valuations relative to history. You can see financials are one of the most undervalued compared to history, and IT and industrials are some of the more overvalued. Um, what people are willing to pay for the stock in that sector. Let's look at some of the top performing stocks up and down today. All right, so let's look at market movers. We have Lululemon. This stock has been like pulverized this year, and now it's just starting to come back. Um, they were hurt by tariffs and competition. They have a lot of competition, Lululemon. There is Nike and um, Activa, I think it's called. So we have um, a lot of competition, and they had problems with tariffs, leading to like a huge downturn. And now they're just bouncing back. And let's look at GE Aerospace. I don't see a theme here. What is the theme? Okay, the theme for this top gainers is stocks that got pulverized a lot I mean, went down a lot and are just bouncing off the bottom. We have Chipotle. They were down like 50% this year, and they're starting to come back a little bit. Same thing with Lululemon, and let's look at the ones going down the most. Okay, Broadcom had that bad earnings report on Friday, and it went down 11%. SanDisk, it's in a related industry, went down with it. Um, so Corning, they make the fiber optic lines for the AI infrastructure build out. So whenever one stock that's a major part of a sector goes down a lot, it drags down a lot of the related stocks. Constellation Energy is an AI infrastructure play. They signed a deal with Microsoft for their data center usage. So they're an energy company, but whenever you have a little bit of a um, one of these, like Broadcom had some problems, um, it takes down a lot of the other ones in that sector. Micron, this is an example of it just taking every stock in that sector down. So Micro's going to report their earnings next Thursday, this coming Thursday. So um, I think it's one of the most undervalued stocks in the market. And the interesting thing about stocks that who was it? Okay, there was a Benjamin Graham who wrote a book on investing. He said every day, Mr. Market knocks at your door and offers wildly overvalued and undervalued stocks. And it's your choice as an investor to either buy that stock or not. And we don't know. It's up to us to do our research of what a stock is really worth, and you have to be ready when a stock goes down a lot to either buy or sell. And so the other 2 months ago we had Pfizer. No, we had Eli Lilly went down 20% on a bad report for one of their drugs. And that's an example of Mr. Market knocking on your door and saying, we have Eli Lilly for 20% off. Do you want it? So a lot of times moves in the market aren't rational. They're just stocks just go down with the sector. So we'll see if Micron, if their earnings are going to help them this week on Thursday. And we have, yeah, all these stocks went down with Broadcom's earnings. Okay, let's look at the sectors going up and down. Okay, so if we look at our interest rate chart, where is our interest rate chart? Okay, here it is. Okay, so interest rates have been going up. So our translation is interest rates going up. That's positive for large cap stocks, financial sector. Stocks that have to borrow money are the ones that are negatively affected by higher interest rates. So let's see if that happened in this. Okay, I think this today's up and down is mostly because of Broadcom, their sell-off. So you've had the semiconductor ETF, all the stocks in the semiconductor ETF are going down because of that report. Um, so if interest rates are going up, then anything high yield is in less demand. That's could be why the S&P Telecom is down. We have the oil sector. They pay dividends, and let's see, the technology sector is down because of that one bad earnings report from Broadcom. And Okay, metals and mining, I'm not sure why they're down. Home builders, as the interest rates go up, then it's harder to sell houses and you're less profitable as a home builder. That's why that's down. And let's see, energy, um, retail. Let's look at the ones going up the most. The ones going up the most are consumer staples, select, spider fund. Okay, so um, we have a lot of fear in the market from this AI trade unwinding. And a lot of times when people are afraid and there's panic in the market, people go to safer sectors that are going to pay a dividend and are safe, relatively speaking, and they're in constant demand. So you have consumer staples, discretionary, consumer discretionary fund, healthcare. They are a stable sector that pay dividends. Um, Financials. Okay. So basically, what this tells us in this is if we look at hold on, here, right here. Okay. So people were moving away from IT, IT, some of the more expensive parts of the market, and they're moving towards energy, financials, healthcare. So these are undervalued. So it's a tale of two cities, two different worlds. Um, so today, the the most undervalued sectors are going up the most, and the most overvalued are going down the most. So that's going to be happening almost every day. Um, we're going to have that push and pull between those two dichotomies. All right, that was a good exercise. Let's go on to our next talking point. Okay, Dan Niles, Cisco is up 31%. That is an awesome performance. We had KBWB, the bank large cap bank index, is up 29%. Wow. Cash was a really bad choice. It's only yielding 3%, and the stock market's up 15% or 16%. So that was one of his worst choices. IJJ, the mid cap ETF, didn't do very well at all, 7%. And this ADTN is like 0%. So I think as Cisco and KBWB were awesome this year. That's double the index. Um, okay, let's look at our stock screen for the week. Um, One thing that popped out to me, we still have a lot of our top um, stocks that we've been following in our top 10 or 20. This stock that's a smaller stock. It's called Newmont Mining. I thought it'd be interesting to go into it. Fidelity says it's one third the value it should be. The PEG ratio is 0.37. So I'm going to look into that to see what it has any credence. You can see that Newmont is in an uptrend. You can see that they're at the top of their um, channel and they're overbought right now. And you can see the price of gold has been going up almost the same exact pattern. So this company is it's almost a one-to-one correlation to the price of gold. Um, this is a lot like buying an oil stock. When you buy an oil stock, you buy a stock because it's run a quality company that's run with a good management team. But if the price of the underlying commodity goes down or up, it the earnings of the underlying company go up and down with the price of that commodity. So I thought it'd be interesting to see this stock in detail. You can see it's overbought right now, and it's around 100. One thing, a rule to follow is if you see a stock in the 90s, it goes to 100 faster than any other price. So if you have a stock at 80, it's not going to go to 90 real fast. But if you see a stock in the 90s, 90 to 100 is like a natural is something I always watch out for. So it's almost at 100. So that's um, let's look at some of the research on this stock. Okay, so you can see that their earnings are, this is really odd. Their growth from this year to next year is 1.7%, but 26 to 27 growth is 145%. So I haven't I haven't figured out why it's only 2%. Maybe they're investing in buying something this year. I don't know. But 145% growth from 26 to 27. Let's take that as the estimate, the actual growth rate, which is, I'm not sure what to make of that, but if it is, the PE is 14. That means that it's 10 times undervalued. Okay, I thought it'd be interesting to see what Morningstar and CFRA said. You can see we have another dichotomy. Morningstar says sell, and then CFRA says buy. So it'd be interesting to see why. Um, let's look at the numbers. The forward PE is 14 for Newmont Mining, and their PEG ratio is 2. So it seems like Yahoo Finance thinks they're only growing at 7%. Their profit margins are great at 33%, and operating margin is 46, which is really good. Their return on equity is 22. That's double what we're looking for. So all the numbers look really good. They have zero debt if you cancel out their debt, cash and debt. Okay, so everything checks off so far. Um, let's look at what CFR, I mean, this is Morningstar. They said it's 42% overvalued. Um, the obvious, higher gold prices drive higher earnings. Um, let's look at what CFRA said. They said it's a strong buy, and they have a fair value of 183. That means it's worth double than where it's trading at, which is very interesting. Let's look at its rationale. Our five-star strong buy recommendation stems from their successful portfolio transformation and exceptional operational execution. A fewer and better approach to created the world's premier gold portfolio through completion of the 3.5 billion divestiture program. The transformation has led to record cash generation of 4.5 billion free cash flow through 3 quarters, providing substantial flexibility for growth and shareholder returns. Okay. Okay, so they say their risk involves the product's exposure to copper and gold pricing, and prices for these commodities can be volatile, reflecting underlying supply-demand dynamics, partially offsetting. We think Newmont has a top-tier balance sheet and attractive dividend profile. Okay, so the interesting thing about Newmont, you can see that it's not consistent. You have a negative earnings some year, and then you have positive, 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 but it's not going up in a regular basis. There's negative, negative. I guess what you have here is um, it's a very unreliable stock, but I guess the fundamentals for gold or the rationale for buying gold right now kind of is the most important factor if you're looking into buying a gold company. Okay, let's look at the gold tailwinds and headwinds. The reason to buy gold, central banks are buying gold a lot. They're diversifying away from the US dollar because everything the US is doing right now with taxes and tariffs. We have government spending in the United States out of control. That's making inflation go up. And gold has been a hedge against inflation forever. And it's in a well-defined uptrend and gold and US dollar has been going down and all commodities values go up whenever the dollar goes down. Um, some bad things about gold. Warren Buffett wouldn't touch it. He doesn't like it because he doesn't pay a dividend. It doesn't produce anything. And there's no way to value gold. No one knows what it's worth. It has some industrial uses. It has um, uses for making jewelry, but it doesn't really, there's no real good way to know how much it's worth. So those are the problems. Here's an article. I always give a link to the article in whenever I have it. Alphabet poised for another paper gain as SpaceX valuation jumps. I follow Alphabet like super closely, and I totally missed this. They own 10% of SpaceX. SpaceX is going to be IPOing next year. It's going to be one of the most hyped stocks in our generation. It's probably gonna go up a lot because they have a total monopoly in a lot of ways. And how many other companies are making booster rockets and sending satellites into space and doing what they're doing? So um, I think it's going to be a hidden part of Google's valuation, a reason to buy it. Whenever whenever a company invests in a stock like Google invested in the SpaceX, every time you have an earnings report, you have to announce the value of that as a source of income. So they're going to have, as that SpaceX goes up in value, they're going to have better earnings. There was a lot in place like last year that said, all of your investments have to be reported as income, even if it's not sold, even if it's only unrealized gains. So, so that's just another reason why Google is a great stock. Here's another article. Alphabet was upgraded by a couple different places. They have couple companies. Mark Mahaney from Evercore, he created a buy in the stock. So we have a lot of smart people saying Google is a good investment. Here's another story. Is MasterCard one of the most promising fintech stories to invest in? And MasterCard and Visa, they are two of my favorite stocks because they're consistently growing at like 16% a year, their total earnings. Um, and they have a 70% market share in credit cards in the world between the two. So anytime MasterCard's on sale, I like to look at, what it's worth and see if it's worth buying a little more. Um, so recently the stock has had weak performance and they think it's a good time to invest in it. So I thought it'd be interesting. I always take these hints from these articles, but you got to do your own research to find out if it's right for you. I looked at the stock chart on MasterCard. You can see there in a well-defined nowhere up and down. This is called a base, like it's like a base. It's like fluctuating between a trading range. And if if there's a positive catalyst, it'll break through this and it'll go up a lot. But right now we're kind of stuck in the trading range. All right, so if it gets back down to here, then it'll be a good time to buy. Um, all right, let's look at what CFRA says about MasterCard. They have it as a buy, um, and they have a fair value of 516. So that's 9.7 times overvalued, they say. The interesting thing about MasterCard and Visa, they've always been trading at a premium, very similar to Costco, because they have a monopoly. Whenever you have companies with a monopoly, they're allowed, they usually trade for a higher valuation. So let's look at why CFRA likes the stock as a buy. Our opinion is MasterCard is innovating rapidly, and we expect the payment network to gain share while margins approach its larger peer, which is Visa. Growth verticals include cash check to card transition and commercial point of sales. Value-added services are gaining momentum. MasterCard is positioning at the forefront of agentic commerce with Agent Pay, enabling AI agents to facilitate transactions. Tokenization represents an exciting driver, with only a third of MasterCard transactions currently tokenized. So MasterCard they have a lot of um, new ideas that they're researching. I know that they're researching stable coins and a couple other new methods of payment. So so this is like a fintech company. Same with Visa. Visa is doing very similar things. Um, they have to keep up with technology to compete in the payment world. So let's look at what CFRA says. They say it's 10% overvalued. This is what I like to see in a growth stock. Look at this. This is almost perfect. We have it growing like 15% a year going back 10 years. And you can see it's in a straight line up. 3, 3, 5, 7. We have a little bit of problem with the pandemic. And we have 8, 10, 11, 13. Great. That's check for me. Um, let's look at MasterCard's growth. We have 16% estimated growth, and their PE ratio is 30, so their PEG ratio is 2. And the way to explain that is you pay more for a car that starts in the morning. So the higher quality companies, usually you have to pay a little more, but they've always traded at a high PEG ratio. So that kind of matches Yahoo Finance's PEG ratio they've calculated. But look at the profit margins. They're 45%, and the return on equity is like out of this world. It's like 15 times what we're looking for. So they're very profitable. The great thing about MasterCard and Visa, they don't, they're like a toll collector. If you make a transaction in their network, they take a portion of every transaction, but they have no liability, I mean, very little liability. The liability, if someone is fraudulent charge, that's taken care of by the banks. And so anyway, so MasterCard, Morningstar thinks they're right about fairly valued, maybe 7% overvalued. They mentioned something about a new settlement with merchants reached, which isn't a big thing. Okay, so here's some things to keep in mind as we're going to have probably one of the better end of the years. Um, we have some things that could blow up in our face. We have circular AI financing, which is whenever you have Micron or you have someone like NVIDIA investing in a company that's buying their products. So that's called vendor financing. And if that happens and the company that they're um, let's say NVIDIA invests in a company and they go belly up, then everything unwinds. So we'll see if that happens. Um, we always like to see Japanese bond yields. If they go up, that might force a lot of stocks to be sold. So if we wake up tomorrow and there's everything is down 20%, it could be an unwind of a carry trade. But you have to kind of ignore those things because it's only temporary. We do have an overbought market right now, so that's concerning. Um, but you can't, whenever a market is overbought, you can't get over your skis and buy more. Um, Bitcoin, okay, we have a lot of forced selling in some speculative instruments. That could cause some more stocks to go down around in the security in the U.S. stock market. Um, Other than that, we are going into Christmas. Everyone is happy around Christmas, so um, I hope I hope that you have a good week ahead. And if you have any questions, let me know, and I'll research it. And okay, I'll talk to you later.